Right. Second day of Trump in the hot seat at the White House, and markets remain volatile, unpredictable. But what we can do is apply the logic behind a multi-time frame continuity approach with an adaptation of the Stacey Burke system, underpinned by this superb indicator, the TrendPredator Pro, that I have applied to my go-to assets for trading. And we'll just take a quick look at the US dollar for the moment. And then we'll get into the other assets. So looking at the US dollar, we'll open up the chart, get a glimpse of what is going on. It's in a downtrend. It's a pretty heavy downtrend. Indicators picking up on that. All the time frames currently are bearish, and the only bullish factor on this chart is the previous month's breakout. So we'll have a look at that and see what we can devise from the various levels across the time frame. So if we go onto the hourly chart, we'll get a wider scope view on this. So what this indicator has picked up on is last month broke out of the previous month's range. What we'll do, in fact, we'll just go into the go-to indicator template for this particular approach to day trading. And here we have everything mapped out nicely for us by the indicator. So there is the previous month's range. And as you can see, it broke out of the month of November. So the indicator is picking up on that. Having said that, the indicator is also picking up that the monthly chart has been breaking out for 3 consecutive months in a row. More than that, but it's picked up 3 consecutive months in a row. So counting back down to here. So what this is indicating is that we are potentially overextended in the US dollar. And as you can see, it's decelerating already this week. So the indicator did a good job of pointing that out for us at the start of this week. So the sell-off was hardly a surprise. We took out the previous week's highs last week, only to come back inside. So that's a fake out high. It's bearish. And then we broke below this week's highs as well. So uber bearish. So we've got trapped traders all up here. Okay. And we're moving away from those positions into potential stop losses, and in fact all the way down into this trend here, taking out the stops all the way into the lows of Tuesday the 7th of January. So very large long squeeze to start off the week, continuing into that squeeze that occurred all of last week in that peak formation high, and the continuation down right into the breakout area from that Tuesday. And then we continue with that move yesterday, finishing off the job. So the dollar remains bearish, even though we're pumping up to some extent today. We're inside of yesterday's range. We gapped up. Volatility is rife. And I just want to make sure on the right chart. Yes, I prefer the capital DXY. Okay, we've got Friday's lows as a potential support. We're pulling away from last week's lows again. Sorry, potential support, potential resistance. And we've got resistance potentially again for the day ahead at last week's lows. And also we have this previous month closing price coupled with the previous month's high that we broke out of. So we're back into that range now. Okay, so we've got a fake out high in the month. So all of this up here, trapped volume with prospects of a continuation lower. So dump pumping up for a continuation lower, perhaps. And the target would be below the inside week lows over here. Stops below for a target. Potentially into Friday the 20th. What was that? 20th of December. Down in here. So in any case, I mean, there's not too much point going into all of this. I'm going to look at the other assets, but this is just to get a feel for what the dollar is doing. We don't need to be too comprehensive about it. It's bearish overall. Okay. Now, this could flip bullish if we were to get back inside of last week's lows. Last week's lows would start to invalidate the bearish bias. We'd have inconsistency on the chart, so just watch out for that. So you could put an alarm on that, last week's lows. So while we're below last week's lows, bearish on the US dollar and bullish elsewhere, such as gold, silver, and so forth, euro, etc. Indices as well. So it might be worth sticking an alarm on that just for the day or for the foreseeable future. We'll stick an alarm on that just to make sure, so that if we don't get that triggered today, I am bearish on the dollar. That comes in at 108.28, depending on the broker, call it 108.30. Okay, so in fact, it's quite a long video. I'll leave that there. So this will be a video just on the dollar. Bearish below last week's lows and looking to trade the dollar across the board. And we'll do a follow-up video. We've got the Wall Street Open now, so it'll be timely doing a video on the stocks, gold, and so forth. Okay, good luck out there today, traders.